It's an expensive piece.
What is this? Is this an audit committee? Or is
That's all it
is
is.
it a special board meeting or an audit committee? It's an audit committee, I'm chair. It's a special meeting, you're
It's a
chair.
special meeting.
You're chair.
You can chair if you want.
Nope. I don't want to be chair.
Because you elected us.
I just want the beard.
Doesn't want to be involved, Bob.
Okay,
Why am I so low?
I'd like to call the meeting to order. Everybody ready?
Check mine up too.
Everybody ready? I'd like to call the meeting to order. This is a special meeting to review the audit of our fiscal year 2016-17. I'm asking people to identify themselves for the record.
Subcommittee Richard, Executive Director.
Amy Trusetter.
Sherry Brown.
Tom Schneider.
Mike Shanley.
And we have members of Bauer and Company.
Lester Burt, Audit Manager.
Joe Mosiero, Audit Partner.
All right, thank you. So the meeting is called to order. The purpose of the meeting is to have a presentation of our audit for this past fiscal year and then ultimately to approve the audit report. And that's the single item that we have to deal with tonight. So I would ask for our guest to give us a presentation.
Okay. I'll start it off and then I'll tag in Lester. You'll see you have this presentation. What we do is we summarize all the information that we want to present tonight in more of a PowerPoint format as opposed to having the financial statement and other handouts. It's just a lot easier to go through. The financials in a draft format right now, we're pretty close to finalizing that. I believe it's due by the end of the month, which isn't an issue. We'll get that issued pretty soon. So if you were just to turn into really the page after auditor communication. So the first page with some bullets on there. Recap the opinion. It's obviously what we're hired to do is to provide an opinion on the audit. You have an unmodified opinion, which is the cleanest opinion. Let me just give a quick background on that. That doesn't mean that the financial statements are perfect. It doesn't mean that there aren't any mistakes or errors in there. Unmodified means that they are not materially misstated. And what that means is an accounting term, but it means that the user of the financial statement would not have a different decision or opinion if there were some other changes to it. It's not, the changes would not be material to cause the user to have a different opinion on the statement. So that is really what the best opinion you can get on an audit. Questions on that?
Best explanation of it I've heard.
Good. So as a banker, that's what he's looking for. If he's making a loan. Accounting policies, it's important to understand that every organization has accounting policies. Accounting policies can affect the way items are treated and recorded and ultimately income. You have no unusual accounting policies. There are other organizations that do, and it manipulates income. And that's why it needs to be reported to the board. The most important disclosures in the financial statements that you'll see when you get the draft are really, this is in our opinion, the New York State Employee Retirement System disclosure. I believe that obligation right now is about $72,000.
Yes, that's the piece they elected to amortize their payments over 10 years.
Okay.
It's $370,000, I believe, at year end for the.
So, and that disclosure will explain how that number, the explanation behind the number and why that's an important item in the financial statement. And the OPEB, which is post-employment healthcare liability, is about $511,000 or so. That's an accrual. And that again is explained in detail in the financial statements. So when you get those would be probably the two that you want to look at if you were to go through the notes. The next page, again, this is all very common. It's important for us to communicate to you that the board is charged with the task of governance. And so it's up to you to produce financial statements that are free of error and misstatement. It's not on the auditors. Okay, it's even on management. They're providing them to you, and you're charged with the task of making sure that those are free from error. They're also charged for you to prevent and detect fraud. Okay, so that's not part of the audit. It is on the board, those charged with governance, to make sure that there's a system in place to prevent and detect fraud if there were any at the organization.
Thank you.
Okay?
Hi.
How are you? We just started.
Ken Stevens, member. Sorry I'm late.
Sorry, we just started. Okay? And we had no significant findings on that.
Can't believe you're late. I was here on time. I was late.
Next page. So the first page, you'll see a few numbers. Significant estimates. What we are required to report to you is what are the estimates in the financial statement and why are they significant? So when you think of an estimate,
I'm sorry, just come back.
sure.
Distracted with my own humor.
No, go ahead.
No significant findings means you're not issuing any MLCs?
We have a few management comments, but they're not anything that we would consider a significant deficiency, something that would affect.
No, oh, okay, all right.
Mhm. They're just simply some
Yeah,
comments,
no,
that are operational,
I should have,
so to speak.
I should have distinguished this significant.
That's all right. Significant estimates. Why are estimates important? Obviously, with accounting and producing financial statements, within those numbers are estimates because we don't know what the true obligation for some of these items will be. So the accounting department is tasked with determining a fair estimate of that. That is an area where organizations do manipulate earnings. So it's important that the board understands where there's estimates and what's behind the numbers. The OPEB we just mentioned earlier, that's fairly straightforward. We look at it, sort of an actuarial calculation. We agree with the methodology here. It's a big number, but it's not really that significant in terms of the whole financial statement anyways. But we didn't find anything within that estimate to give us any concern that that number is not accurate.
I haven't looked at post-retirement, our disclosure at the bank with post-retirement healthcare benefits is just very small because of, 106, and we just.
Probably don't have many people.
Yeah,
on it.
yeah, we cut it, we grandfathered in a long time ago, and there's nothing forward.
Right.
Where have they taken, the discount rate or interest rates on this? And, is there any strategy being done forward in other organizations to, protect that liabilities fluctuation?
Yeah.
Because, I imagine that it's gonna go down in a rising rate environment, yet here we are going up in 16, although 16 was some kind of falling rate environment.
Well, a piece of that probably too is estimating the cost of what that.
Oh, right, that's what
That
we,
would be.
yeah, what's the medical inflation rate that who does the actuarial?
It's firm, Albany, maybe. There's a new one.
Yeah, it's changed.
It wasn't done this past year. You get a report every 2 years, so it was done
Oh, all right, okay.
2 years
Yeah.
ago.
All right.
I want to say it's
So just carry it
7.5%,
Yeah, okay, that makes
top
sense.
of my head.
That sound right, Tim? Okay.
Okay.
Curious, I haven't looked at them all the time.
And then the other large estimate is depreciation expense. That's a number actually that is not recorded during the year. Here, we have a software where we drop the assets in and give that number. So there's no opportunity for manipulation with that number. And it's a large number, but again, it's a fairly straightforward calculation
What's it include, all the physical?
of all the physical assets.
All
Okay.
equipment, land
Okay.
improvements, all capital projects.
What would
And
drive,
capital projects?
Yeah.
what would drive that percent, that's a fairly good percentage change year over year,
Yeah,
It would be all the capital projects like the pier and all that stuff, the terminal that completed at the end of the prior years and then was a full year depreciation
Okay,
this year.
all right.
yeah, you had quite a few
They
going.
were just sitting there processing improvement.
Yeah.
The next item here, adjustments recorded, what I think it's important for the board to understand, because you see financial statements throughout the year, is after the audit is done, how much do those financial statements change? And so we start out on this page showing what is our pre-audited net income, and then what audit adjustments recorded, and what is the final audited net income. So you can see the first bullet, management adjustments after we received the trial balance, 22,000. That's a pretty small number. That means that the books were in pretty good shape when we got them. The only adjustment that we recorded was depreciation. So I would say that the books are in very good shape when we come out to do the audit. We really don't have any audit adjustments to speak of other than depreciation, which means we're not finding a lot of things that need to be adjusted that are wrong. So it's a good sign. I'm going to turn the next session over to Lester. He'll go through the financial statement.
Okay. The next 3 pages, what I like to do is, just kind of summarize from a high level your balance sheet, income statement, cash flows. Not in too much detail, I say at 10,000 feet. So the way I always kind of look at this, on the first page, you're looking at your balance sheet. This is a snapshot of what assets and liabilities you have at March 31st, 2017, 2016. So it's on that date, stop period, here's what you have to generate revenue and serve your customers for the next period. So 2016 is where you started. And if you look at that compared to this year, you're up 300,000 in cash. I think that's directly from cash flow from operations and capital contributions. And then also you go down a little bit farther, your total current assets are 1.5 million. You compare that to your total current liabilities, which are 245,000. So you have a current ratio of about 1.2 million, which is very strong. And what drove that down, if you're comparing that, looking at a little bit last year, AP was high last year because there was a couple CNS invoices that were still outstanding due to the end of construction and all your guys' rehab.
Why that analysis is important is you're looking at your working capital. It's a measurement of liquidity. So you want to know that you have a good amount of current assets to be able to pay off any of your current liabilities that you might have. And to have 1.3, and actually that ratio is, what, about 7 times, right? Close to $7 of current asset for every $1 of current liabilities. That's a very good ratio. I mean, we see healthy companies that more like 3 to 1 or 4 to 1, so.
Would you present what you just said one more time, so I can follow it a little more closely?
So I was comparing total current assets, which is all your liquid assets
Mm-hmm.
that you can turn into cash to pay off your obligations.
So that's the 1502, right in the center of the page. Yeah.
And then I turned the page and I compared it to total current liabilities. So you have,
245.
yeah, so you have one,
How many times do the current liabilities go into the current assets, which is your current asset ratio? And they
Right.
say 7 times coverage is very good.
Okay.
7 times coverage is very good.
Okay, I've got it now.
Because your current asset ratio is a typical ratio you're gonna calculate in lending. It's a function of how leveraged you are, and particularly how much yeah, and leverage is gonna be the longer term debt too, but, where are you if you have to sell? If you have the liquidity on hand to sell your liabilities,
Okay,
because that's gonna be a function of, if I'm short cash, what do? Where's my source?
but we're in good shape there, obviously. Pretty good shape.
Which is why,
very good shape.
again, on the balance sheet side, I always, what's good about this presentation, and when Lester gets to it, is the cash flow statement. I'd like you to spend some time stepping through the cash flow statement, what it means. Because just, when you look at the uniqueness of this operation relative to where, in a simple banking term, when you talk about things like dividend, right? You're really looking at earnings and adding back depreciation and amortization. What the cash flow statement does is just lay out those sources, but it's still doing the same thing. It's sort of reconciling net income back to cash flow. Because, cash on the balance sheet then is reflected in, your net reserves is far more important to what's going on in the income statement from a long-term sustainability. The
Okay,
income statement is gonna always show you what's happening sort of as a cyclical trend within the business environment. But the only purpose of net income within a nonprofit organization is to feed capital.
okay,
Is to feed capital back in the form of, most of that capital ends up being held in cash until it's reinvested. Because all your growth is gonna come as a function of your ability to reinvest capital from retained earnings. It's really just that simple, and people get too caught up in, the income statement on a month-to-month basis, and aren't focusing on the larger picture of how investments reflect themselves in the balance sheet to drive future revenue. And that's when people get into the cycle of managing from the expense line rather than managing from the revenue line.
I had to pull out that file draw of 101 and 103 accounting, just.
Yeah,
Okay.
yeah, no, but, this is, if we're gonna, do financial statements, I'll tell you, if you ever, particularly in the nonprofit world, just look at cash and reserves.
Okay,
If those are growing, you're good. If those are shrinking, why?
okay. Thank you.
Is that fair enough?
that was good, very good.
But I want to step through that cash flow statement, it's a good presentation
Okay.
for this type of operation. Meaningless on a bank's financial statement. Cash is your inventory.
The next item I was gonna note on for total assets was that 92% of your balance sheet is capital assets, so it's property held for leases. in capital assets, so that's money you guys have taken from operations, grants, contributions, and then put back into the board to further develop your services. So you can see that over the past few years has grown pretty nicely.
Mm-hmm.
So flip into the next page, looking at your guys' non-current liabilities, in the current year you sold the Hammerhill property, which alleviated a nice chunk of your guys' long-term debt. So you no longer have those cash flow monthly payments to make on the mortgage and no payable related to that property. You have due to the state of New York, which is interest-free loan, basically, that you guys will have to pay 50 grand of principal a year. Let's see here. Another one still outstanding that I'd say is significant that we haven't already kind of talked about would be your bond payable, and that's the $300,000, which you don't currently have to pay any principal on, but it's interest-only payments for, I gotta believe it's a while, I think. I want to say 10 more years off the top of my head. Yeah. So ultimately, combining those factors and looking at your total net position, for how capital intensive you guys are, you're not very leveraged. So that's a good sign of taking on for future projects going forward. And also you can see at the bottom line, total net position that's increased year over year. Looks by about 1.5 million. So that's a key indicator of how you guys are doing. Because basically what net position is, you take all your assets, then minus all your liabilities, and that's what's left. So it's kind of your built-in equity. Similar if you're looking at your monthly mortgage and how much you have left on your house and what's worth and stuff.
What created the net pension liability to be such a huge difference in year to year?
That is calculated by the state.
Okay.
We book that right off the state report. So they have actuaries that go through, complex calculation, and then basically you get a one-page report that says, here's your estimated liability based on the number of employees, salaries, years of service that we estimate at, that March 31st date of what you guys have incurred year to date but not paid.
Did that have to be raised, that amount, just to make sure the pension stayed viable? I mean, we haven't had that many more people
Yeah.
working here.
The variables and actual calculations for pension plans, I'm much more familiar with now than I have been on the post-retirement healthcare. There were no variables here that would drive that change, because interest rates didn't move, the number of employees, as you indicated,
No.
doesn't move. It's just an indication that perhaps
Bernie Madoff.
the
No, just joking.
the proportional share allocated
That
here.
was true though years ago,
Yeah.
for sure.
That
Yeah.
was a problem. Yes, and that's the other thing, the market value of the assets would have increased over the past year, over that term, greater than, the liability. So they should have had an increase in net funding.
Did the state tell you how well funded the pension is? Like any 85%, or is it 100% funded, or didn't the information you received from them tell you?
But in Gloucester.
I know, I sat on a pension board for the iron workers, and we're 85% funded. And we'd like to be at a higher rate, but at least we're carrying the members, and
85% is pretty good.
Yeah.
for the foreseeable future.
Yeah.
But we were always,
If you want to know the state's balance sheet and look at the structural deficit by net present valuing the future stream of promised benefits down the road, you're talking about a huge structural deficit in every state in this country.
yeah, I know. We were always in the
They'll
high
never-
90s,
They'll never show you that number.
and we had a large group of
The government
retirees.
won't show you that number, no state government will show you that number.
So in other words, we don't know how well funded that pension is then. Obviously, it's healthy if the state makes us give that much more money this year, then,
Well, you're not giving, you're just reflecting on.
I
the
understand.
Liability,
yeah.
But in order to, record that liability.
Is that something for alarm or not?
Honestly, I looked at your annual invoices and the amount kind of stayed the same you paid in this year compared to last year. So it's not really,
So, yeah.
Well, and like you say, the variables are
Because they have to-
pretty much constant.
I mean, some of the things, and Lester, correct me if I'm wrong on this, but these pension liabilities get affected as, if for the iron workers, if a large company gets out of that union, the remaining members have a greater proportion of the liability.
To pick up.
Right, and so if this is, say, a state worker, and you're having less people in the system paying for, you know, a larger group of retirees, that will. may
We've
have
been
an
able to
impact.
balance pretty well. I mean, I don't even wanna talk about it, but,
Yeah.
you know, we've managed it well.
Yep.
That's what I think,
Yeah,
so.
but to Tom's point, there's really nothing this organization can do to affect that number.
Yeah, when they say proportional share, this is the state calculating its liability and saying based upon the size of this entity.
So in other words, this is a fee that we have to look forward to paying each year, depending on how the state does its calculation.
Whatever their formula is.
This is not net periodic pension cost.
Okay,
And you'd have to look at the tables, we'd have to look at the actual tables to break it down, to really see what's in there, what's expense, and, you know, what's just cash versus liability.
okay.
But no, that change is not necessarily expense. Expense is reflected in a different number called net pension cost. I don't know if it's the same on this side of the world.
I just wanted to make sure I didn't have to go home and worry about it tonight.
You don't have to go home.
No, don't.
Okay,
There are way bigger things to worry about than
Okay.
that line.
Alright, so flip
But you
it.
did choose the most challenging topic. This is complicated. as it-
I'm sorry, I didn't mean to interrupt you.
That's all right, no, this is your meeting, so, fine.
Flip it to the next page, this is your income statement. You can see the years on here are your fiscal years, so 2017, 2016, 2015, so that'd be April 1st, the prior year, to March 31st, 2017. That's on a fiscal year basis, not calendar year, just to avoid any confusion. So just give a quick recap, looking at your operating revenues and total revenues. 2014, 2015, you guys were heavy in aluminum, so you guys were on a nice upward trend. Then 2016, you guys had a strong year, which was largely attributed to the break wall rocks that you guys got the unloading and storage income from. So 2016 is a little inflated, you know, with a one-time revenue source compared to other years, just to keep that in mind. So then you get down to 2017, you came in about 4 million in revenue, which is a 25% decrease from 2016. But if you back out the one time, it only comes out to be about, I want to say 13% decrease. And that's all attributed to aluminum. So going down the next section, total expenses. So at the same time, your revenue decreased 25% on surface. You went up 100,000 in expenses, and a big piece of that was due to depreciation with all those projects being placed in service. So that's why I have that one line broke out, 977,000. Just kind of segregate that and keep in mind that, you know, for the most part, that's all non-cash. That's being amortized down into expense. So you really got to take, like Tom said, when you look at the cash flow, add that back in to kind of see how you're really doing.
Okay,
And kind of at the same time, you have your OPEB expense, that's non-cash also. Another item I want to touch on in non-operating expense is you took a paper loss on the sale of the Hammer Mill property. So what that meant was, back when it was purchased, maybe correct me if I'm wrong, but that was purchased with a grant contribution. And then it was depreciated over a period of years, and then you guys sold it at a certain price, which created a small difference in what the depreciated value was. So that's really also another non-cash item that you guys kind of took the hit for this year.
Do you remember, Lester, that amount?
Which
The loss?
Oh, it's 435.
Oh, it's all of it, okay.
Yep. So all in all, when you look down the loss before capital contributions, you really have to add back in your non-cash items. And then a couple other items that affect the expense of current year is you had reduced insurance expense because you guys went up to bid the previous year before, and professional fees were down, primarily related to the inland port. There's less legal expenses during the current year. And the last item to touch base on, you can see capital contributions remain strong at 2.3 million. Any questions? If confuse anybody. Okay, so the next page.
You know, other than you said on recording the depreciation there, but it'll be, come in with a monthly presentation after that. We spent more time in the income statements than
Okay.
on the balance sheet. But the cash flow statements, you know, a good new report to this kind of stuff.
Okay.
Did you want, Tom, any further explanation on the income statement, or?
No.
Okay, good.
Like I said, it is what we expect it to be.
Yeah.
With depreciation run through.
Right. As Lester said, most of the big items there are non-cash. So if you take those out, you're really looking
On
at.
variance,
Right.
but, you know, operating activities will show you kind of the heart of cyclicality in customer receipts.
Okay, so the next statement is cash flow statement. And what this does is what Tom was saying earlier, is it kind of takes your net income, reconciles items on the balance sheet, the plus minus, the non-cash, and kind of shows you, you know, what money you brought in, operating activities, where you spent it, and what you invested. So the first item, since you guys are a governmental entity, you're on direct cash flow. So what this is that we show the first one, total receipts from customers, how much you paid out to suppliers, and how much you paid to employees. And that gets you down to your, like I agree with Tom earlier, your key operating result
Yeah.
figure.
That's a more important line, cash, you know, net cash provided by operations is a better indicator of year-over-year, you know, performance or performance challenges. And in this case, you know, we knew that 16 was exceptionally good because of one-time items, and, you know, 17 had some cyclical challenges. But it still brings a positive result, more contributory result from operations.
Are we in fiscal year 2017, or did it end on March 31st?
Yeah.
It ended, okay.
Okay. So ultimately, you guys ended up with positive operating cash flows of $350,000. And if you look at the next section, this kind of shows where you guys spent some of your money. But the other thing to keep in mind in here too is that the proceeds from capital contributions and state grants don't go into the operating results. It goes into this next section, cash flows from capital and related financing activities. So what this section shows is that you guys brought in $2.3 million, and then you also spent $2.3 million to reinvest in capital through state grants. And other items are pretty smaller. You got $100,000 in cash from the sale of Hammermill properties once the debt and everything was paid off. So that generated some positive cash flow. Then if you look at the last two, that's kind of your principal paid on debt and line of credit. So show ultimately it came down, you ended up spending a net of all those activities combined $35,000 out of pocket. Then the last section is just a quick cash flow from investing. That's just interest earned on your bank accounts. That's considered investing activity for the statement of cash flows. So ultimately, to sum that up, you guys increased cash flow $315,000 for the year. You started at $768,000. So ending at about almost $1.1 million in cash. Any questions or?
No, that, for me,
And, you know, that was kind of it. We just,
Yeah.
you know, summarized our communications we're required to, and just like to do a 10,000 feet overview of your guys' finances, you know, one last time, look back at the previous year as your quarter into the current year.
but, you know, they're just a normal governance flow, and in terms of ensuring independence, you always want to create the opportunity at this point in time to have, you know, an executive session with the auditors, just in case there's, you know, disclosure, you know, that they wouldn't otherwise be making in front of management. But, you know, I don't know that we done as a matter of protocol, but it's always good to be reflecting in the minutes that the board had an opportunity to meet independently with the auditors. So I think that you know, from a good, proper governance perspective, you know, I would go to executive session, which would, include, excusing staff and guests.
Okay.
It doesn't have, it could be a minute, just to make sure that there's nothing,
Right.
there's nothing there, but the minute should always reflect that, because otherwise you haven't demonstrated the level of independence between, the board or the audit committee engaging the auditors rather than management engaging the auditors.
Motion's in order to move into executive session.
I'll move it.
Second?
Trustee Stephen. All in favor?
Aye.
Opposed? We'll now move into executive session.
Okay, go ahead.
Motion's in order to resume regular session.
So moved.
Mr. Stevens, Mr. Brown. All in favor of resuming regular session?
Aye.
Opposed? We are in regular session.
Okay, well, since this was more of the, an audit report, we discussed a few items and drilled down on a couple of different numbers related to concentration of revenue, but one of the additional comments comes out had to do with just, and this is everywhere, with IT security. It's not more systems enough. Who does, how are they done?
The IT is done by the computer outlet. As far as security,
Yeah, right. So we talked about, there are plenty of people,
don't exist.
there are plenty of people out there that we can engage, and I don't know what, the rules are on the bid process, but, we've asked Joe if he put forward a proposal on just, coming in and doing, successes and penetration testing. I was gonna say susceptibility testing. I couldn't get it out. It's just a word. But, there's a pretty standard protocol. What they'll do is just come in and test against their firewalls and see where the holes are, because there are always holes. And it's just a constant white hat against black hat battle that we have to keep up. So it's probably something that, will come with some recommendations and recommendations on the frequency.
The server is not
of testing.
secured, obviously.
No service is secure.
Huh?
No service is
Right.
secure.
And then the other thing we just recently done, our backup was right next to the server.
Right.
So if the computer goes, so does the backup. So but we recently engaged
Yeah.
just for
Computer outlet,
yeah,
Nora.
Google, but I understand Google doesn't meet the state.
What? There's local firms here that do this stuff. We might as well start with the business partner we already have, that we're already engaging on audit and internal controls, and this is just a function of internal control management.
The other thing we don't know is who all has access to it. I mean, I certainly,
That's what we would want
it's,
to find out.
right, everything's out in the open, so you can.
And why don't we have them scope out something that's fuller the first time and then recommends for future scope after the first look through. But they won't know future scope until they do first scope, so make first scope broad.
Yeah.
Right? It'd be an all-inclusive look, but you can't sit out there. We have people grabbing your email. And this didn't come from us, but, just people grabbing common emails. And I don't know, I can't remember how they were asking for it, but, the president, the state president for Bank of America is, serves on the executive committee, Bank Association board with me, and he gets an email from me. It kind of looks like it's from me, asking for stuff relative to documentation. And it's like, they figured out pretty quickly.
Well, we get a lot of viruses.
We look for this stuff,
Yeah.
this isn't virus, okay? Viruses are implants into the system. This is fraud activity that takes place by pretending you're somebody else. This is social engineering, is the classification under which it's called. Social engineering comes in a lot of different ways. You can get somebody who's trying to, talk their way behind the teleline because they're the, cash register or maintenance people. And if they get behind there, then they have some access to screen information. There's a whole series of things. We train constantly.
We are weak.
But it's social engineering, and so when they come in, you know, they'll drop flash drives on the ground, see who picks them up, plugs them in. There's all sorts of things that get done, but the latest testing that they're doing is this idea of emailing out under a fake email from somebody in authority, trying to extract information, particularly, you know, staff to employees, or direct, you know, me to my employees, saying, you know, it had to do with payroll access. And, you know, our people picked up on it pretty quickly, but it was just a test. And, you know, we kind of passed the test, but it's just a good training option. You know, sometimes IT likes to play gotcha, you know,
Yeah.
but, because I don't want my people feeling like they're in gotcha world. But you have to look at your vulnerabilities in information technology, because it's just become the emergent risk that scares the hell out of everybody, starting with the DHS. Homeland Security is, you know, very nervous about this. You know, the banking industry works directly with, you know, Homeland Security on it. The facility called FSISAC is all very scary shit. Oh, sorry, scary stuff.
That's what I heard.
Yeah.
That's what I heard.
So, yeah, you have to, you know, you just have to say we're scaled enough with that. Yeah.
Yeah, the other thing we want to shield is some of our videos, because, you know, and then this is where we're vulnerable. We allow access remotely. So now if you allow access remotely, you have access to our server, you can backtrack into our,
Let them come in and look, they'll know the routine. This stuff is pretty standard, you know. I remember years ago, they found, you know, a hole through the you know, mortgage calculator in the, you know, website. Wow. It's crazy stuff. So, you know, all you're putting is a tool and utility out there for customers to use, but the people who wrote it didn't have an extra layer of security. Again, this was our own test.
you know, what
People that we hired.
and I don't want to run your test too much.
Yeah.
One of the things I would like to look at, because we do a lot of things manually here, and Debbie and I talked about it a little bit, is go electronic. You know, pay bills electronically, right?
Yeah.
And versus every day we have to write our checks.
Yeah.
Every day we have to go chase paper around, right? And one time we talked about going a little bit more electronic. It would be easy on everybody.
Yeah.
But
But, you know, what is it? Are you buying a, you know?
the bills are all
Are
the
you
same.
buying, yeah, I'm saying, are you buying software, or, you know, are you turning it electronic by just, you know, imaging documents and so document image or forms image is much different than a billing system that creates electronic invoice.
We talked about this, I think, when we were here. We've got a lot of clients going more to that system, like a bill.com and billpay.com, and I think some of the banks may have their own systems that they offer. It is useful when you have the approver of expenses travels a lot. It's much easier to just be able to pull up on your phone, and,
Yeah.
but
But
it's
you-
usually
We
cloud-based.
do, you know, we do that with why.
Yeah. Yep. So,
Authorizing any money transfers, you have to go mobile, so.
yep.
The approvers from the golf course can approve for the real workers in the office.
Okay. Does anybody have any other questions for our auditor? Okay, the motion of 6/06/19/1701 to approve the 16-17 annual audit is in order.
I'll move it.
I'll second. Mr. Chester and Mr. Brown. Is there any question, any discussion? All in favor of approving the audit as reported?
Aye.
Aye.
Opposed? Unanimously? I have voted also yes, it is unanimously approved. Thank you very much, gentlemen, for a very interesting evening.
Thank you.
Thanks, guys.
Any other items? We have no other items, this is a one-item business, so motion's in order to adjourn.
I'll make a motion to adjourn.
Mr. Brown?
Oh, I'll be quiet, the whole
Oh,
meeting, so
come on.
I'll second it. I
Yeah.
wanna get in the.
Guys, get out of the
Mr. Schneider?
I wouldn't really think I
All
was
in
here.
favor of adjourning?
No, I only want to be a second. That was all on you.
Unanimously adjourned.
If we adjourned erroneously.